true buying and how much it was a little bit of short covering going on?
No doubt there would have been a little bit of short covering going on, given that we are going into a pretty big weekend. We do see the Eurogroup meeting in Poland, so comments coming out of that meeting are going to be watched very closely. And if you have a look at volumes, it was an extremely low volume rally. It was anemic volumes for a Friday, but a strong gain of 1.9%. So it does demonstrate that perhaps the move today did lack a bit of confidence. The good news was, though, all sectors were trading high. The best area on the market today was the property sector. We saw Goodman Group leading the pack. They're up by a massive 7.5%. We also saw resource companies outperforming. Sandfire was a stand-up, up by 8%. Aquila Resources continued to do well. That was up by more than 7%. But I guess the underperformer was gold. And if we have a look at the outlook for gold, it's probably a short-term negative, but a long-term positive on the charts. And if we have a look at gold prices in Asia, they were down by 1.1%. We saw the gold ETF in Australian dollar terms down by 3.3%, but otherwise a great performance by the Aussie share market.
Sustain this confidence, I suppose, in Europe, and how much rest or how much are you looking to come out from that finance ministers meeting?
Look, we did see a positive response from markets overnight and today in Asia, but I guess in terms of the Greek default story, nothing's really changed on that front for me. We have seen Germany and France come out to say yes, they're going to keep Greece in the Eurozone, but really no mention of whether or not we're going to see a default. But I guess the risks associated with a possible Greek default have decreased. We've seen Societe Generale, BNP Paribas looking to sell assets so that they're better capitalised, and the US dollar funding problem. I mean, we've heard talk around the market that there was a lack of US dollars, and we have seen that ECB facility drawn on this week, $575 million. So there was a lot of speculation on which banks may have required this emergency funding. So the fact that we have seen central bank coordination are positive for markets, and I guess it just means that if we do see a Greek default, that takes a little bit of the risk off the table. In terms of what the markets are looking towards, though, we do see in Poland that meeting of the Eurogroup, and that's going to be very closely watched. But next week is going to be an absolutely massive week for markets. We see the two-day FOMC meeting, Ben Bernanke's speech coming on the back of that on Thursday, and then of course next weekend is a G20 meeting. So once again, some huge events coming through, and as John mentioned, the data in the US deteriorating. I mean, overnight we saw the CPI print that was hotter than expected, the Philly index, and that was worse than expected, and we saw the initial jobless claims once again ticking up 428,000.
Looking back just for a moment, Julia, the winners and losers of the week, was it quite stark performances? I imagine Cochlear is up there.
There were some huge performances. I mean, you mentioned Cochlear, and I guess a lot of the action was in the healthcare space. The healthcare sector did end up being the worst sector of the week. That's not surprising, given that we did see Cochlear losing around about 30%. That was, of course, on the back of its product recall, and then we saw another leg down for the stock as one of its competitors, Sonova, got FDA approval for its product in the US. But also the best performing stock in the ASX 200 came from the healthcare sector as well. And we saw Sigma Pharmaceutical coming out with its half-year profit. Great to see this company coming back to profit. Brokers really quite positive on this stock, so we did see Sigma Pharmaceuticals up by 19% for the week. But all in all, we do end the week with a loss. The US market has been up by 4.8% so far, but the Australian market has seen a loss of 1.1%. Still, at the beginning of the session, we were down by 2.9% in the week to date so far, so today's performance means we have come back a little bit. The best sector has been the property space, followed by some of the defensive areas like telecom, utilities, and then the energy space as well. But healthcare certainly been the most volatile one this week, with the best as well as the worst performer out of the top 200.
Fortescue, massive outperformer, up 3.5%.
We have seen Fortescue well supported, and I guess we are seeing inside buying, that is the directors of the company or the executives of the company buying stock, and that's generally seen as a positive sign of confidence by the market. Andrew Forrest, Twiggy, owns 31% of Fortescue, and it looks like his private company, the Metal Group, has been buying up more stock. Now, this could be on behalf of executives as well as directors, but in the last 3 weeks we've seen some massive parcels of stock go through. We've seen $31 million first and $27 million in the latest is $42 million, which brings up the total of shares bought by the metal group up to $100 million worth over the last 3 weeks. If we have a look at Fortescue, we know that it is trying to ramp up production, so it's at coming close to 55 million tonnes per annum, and we know it's hoping to get to 155 million tonnes per annum, so that's a huge jump. The move from 55 million tonnes to 95 million tonnes is going to come through its Chichester project, and then from 95 million tonnes to 155 million through the western part of its Solomon project. So I guess exciting times for Fortescue, and certainly well supported, but it looks like the moves of both Twiggy as well as executives and directors to buy the stock in these volatile times.